Welcome, students, to today's lecture on ACC 103, Accounting in Business Ventures, Module 1, Lesson 1, is from your regular lecturer, Professor Sergius Udeh. At the end of this lecture, learners will be able to explain why all business owners need to keep accounting records, describe basic accounting records, and explain basic necessities for business venture owners. Let's look at introduction. Students, if I ask you, I know many of you will tell me that accounting records will only be needed by accounting students or accountants. But I want to tell you that it is not the case. Every business venture owner requires the knowledge of accounting. The person requires it to keep track of progress the business is making. The person requires it to be able to determine financial position at any point in time. Even if it is a small business, a big business, the financial position of any business venture is important and can be required at any point in time. What accounting records are necessary in business? Accounting records that are necessary in business include sales day book, purchases day book, cash book, and many others. Because this lecture is for selected few people who are not basically in accounting, I will not want to bother everybody with the other details. Why do we need to keep these records? The records are important to facilitate determination of financial position of the business venture. It could be that the business wants to know whether it is making progress or not. It could be that the business wants to know its financial worth, or what we call net worth of the business. As a result of this, these records must be kept by every business venture. It is necessary that the basic accounting records are kept. However, the type of accounting records to be kept depends on the nature and activities of business venture. No two business ventures maintain the same activity, and because of this, the records they will require will vary according to business activities on ground. Let's look at the basic accounting records. What are these basic accounting records that must be kept? Cash book is very important and is required to be maintained by every business venture. Cash book is a place or a book where receipts and payments in cash are recorded. All receipts and payments in cash are needed to be recorded in the cash book. It is one of the most important documents every business venture needs to keep. Another one is assets and liability records. This must also be maintained by business entities. It is important that at any point in time, a business outfit must be able to say, this is what we owe and this is what we own. What a business owns and what a business owes must be kept ready at any point in time. If you look at the picture here, you will see hands, you will see money being exchanged. It is representing transactions in cash. So every transaction in cash is expected to be recorded in the cash book. What are the types of cash book? There are two basic types of cash book, and these is grouped as 1. Main cash book, and 2. Petit cash book. Let's look at main cash book in a little more detail. This is a cash book that can be differentiated by the nature of transactions it is designed to handle. As a result of this, we have single cash book, we have 2-column cash book, we have 3-column cash book. The difference among these lies in the number of columns contained in the cash book. Let's look at single-column cash book. This is also called simple cash book. This is required where transaction is done purely on cash basis. It is divided into 2 major halves, the left side and the right side. The left side is also known as the debit side, abbreviated as DR, while the right-hand side is known as the credit side, abbreviated as the CR. These 2 sides are kept on the principles of basic accounting, which states that all receipts are debited while all payments are credited. In other words, all receivers are debited while all payers are credited. This follows the accounting principle: debit receiver and credit the giver. This is also illustrated in the Bible, as we have sometimes, or as we are told in the Bible, that it is more honorable to give than to receive. In other words, when you receive, even in the biblical instance, you are debited. But when you give, you are credited. And that is a principle that is even maintained in heaven. So let's look at the format of a simple cash book. If you look at the diagram or the picture before us, you will see that you have a simple diagram that is divided into 2 parts. The first one, by my immediate left, you have a column for dates. That's what you can see here. This date column is where the date of transactions are entered. For instance, if a transaction takes place today, the 19th of July, 2023, you enter the date here. Then you come to the next column meant for particulars. You enter the details that will help you locate the transaction. It could be the name of the person. It could be the name of the person that has effected the transaction, or it could be the name of a company. That is where what you enter in the particulars column. You look at the next column that we refer to as folio. This is a column where the transaction can be located in the ledger. You know, like we said, accounting entries follow double entry system. That is, every transaction is entered in 2 different places. One where it is credited and another where it is debited. So the reference number you have here helps you to locate where you can trace it in the ledger. Now the next one is amount. The amount column, that is what you can see here. This is where the value of any transaction is entered. After this, you now have the end of the first half. This line here, after the amount, is the line that separates the column or the section into 2 equal halves. That's the line here. From here now, you have a repeat of what you had, starting from the dates. That is this, the particulars, the folio, the amount. The difference in what you have here is that while the section from here, from this line to the left, is reserved for receipts, The column from here to amount here will be reserved for payments. So you enter the date, the particulars, the folio, and the amount in respect of every transaction. Now, I have a simple note here that tries to explain what I have just said. You have the dates. Like I said, that is where you record the date of transactions. You have the particulars, the source of income or the cost of the expenditure is recorded. Now you have the folio. In the folio column, that is where you have the reference to where the transaction can be posted or where it can be located in the entries in the books or in the subsidiary books. Then you have the amount column. This is where the value of the transaction is recorded. Let's look at 2 and 3 column cash books. In the 2-column cash book, the book is designed to contain columns for both cash and bank transactions. Remember, in the single column cash book we discussed, there was just one column where the amount is entered and the cash is just entered there. Nothing again. You don't have column for bank. But in the double column cash book, it is designed in such a way that you have 2 columns, one for cash and one for bank. You have it on both sides, both the left, the debit side and the credit side. You have it there. You have one for cash, one for bank, and you record accordingly. Then in the 3-column cash book, it contains an additional column to what we have in the 2-column cash books. In the 2-column cash books, we have a column for bank, we have a column for cash, but in the 3-column cash book, we have an additional column that is reserved for discounts. You have one on the debit side and you have one on the credit side. The one on the debit side is where you enter discounts allowed, while the column for discount on the right side is where, that is the credit side, that is where you record discount received. The principle for posting all recordings in these books, in these cash books, remain the same. The principles remain the same. And what is that principle? The principle is that you debit all receivers and credit all givers. We follow the same principle in recording the single cash book, the 2-column cash book, and the 3-column cash book. Now, the second important record we keep in accounting is what we call asset and liability records. This records what the business owns, that is the assets, and what the business owes, that is liability. Any asset that is owned by the business is expected to be recorded in the asset column, while any liability attributable to the business is supposed to be recorded on the liability side or liability column. Increases or depletions in assets and liabilities are also tracked. They are maintained to show that the business is either growing or going down in terms of assets and liabilities. Increase in assets represents growth, while increase in liability denotes decrease in value. However, an important relationship exists between assets and liabilities, and this is expressed in what we call accounting equation. The relationship, as I have just mentioned, is expressed in the understated accounting equation, where we said assets equal to capital plus liability. Assets, like I explained, are things owned by the business. It could be in terms of equipment, it could be money, it could be other things that the company uses to generate funds. They are generally referred to as assets. While on the other hand, we have capital, which is a form of liability, but basically speaking, we reserve the term capital for what we call owner's contribution to the business. Owner's contribution to the business, we specifically refer to that as capital. It is part of liability because every business is seen as a different entity, a distinct entity from the owner. So under that arrangement, the capital introduced by the owner is a liability, following what we call the equity concept in accounting. Then what you have as a liability is what people have contributed to the business, what the business is owing others apart from the owner of the business. We call that liability. It exists in different forms. So for the purpose of this, we are not going into too much detail. Now let's look at other accounting records which business owners require to keep. There are some other records which help business to account for its progress, to determine whether it is going back or going forward, whether it is growing in value or whether it is going down. These other records are also important and they are kept for different purposes. One of the reasons why they are kept is that they may help in preparing financial statements for various uses. It could be in determining financial statements, what we call final accounts, final statements. They can be used for purposes of taxation. They can be used for purposes of getting loans from banks. They can be used for purposes of determining the net worth of a business, especially when a sale is anticipated or merger is anticipated or even dissolution is anticipated. These other records will play a significant role in determining what happens, because what happens to a business sometimes have reference to the worth, net worth of the business. What are the other necessities for business venture owners? Every business venture owner must strive to keep at least 2-column cash book. This needs to be maintained always because transactions can either take place in cash or be effected through bank transactions, especially these days that most people don't like carrying cash. It is important that at least 2-column cash book is maintained. This will help customers, individuals who want to effect their transactions using bank transfers or checks to be recorded and captured appropriately. It is also important that every business venture tries to maintain or apply the concept of business entity concept, what we call entity concept in accounting. This is a concept that tries to distinguish or see the user, the owner of a business, as a different person from the business. This is important because business entity requires to have a legal entity. In case of anything, the business can be sued or the business can sue. So the owner must be separated so that the wealth of the owner can be distinguished from the wealth of the business entity. So every business entity that strives to succeed must try to apply the concept of business entity concept. Very, very important. Then let's again look at the next necessity for business ventures. There is something we call prudent financial management. Every business owner needs to adopt the principles of prudent financial management. It is a concept that tries to say that you look at the wealth of the business and apportion appropriate expenditure to the business. You don't use the wealth of the business for personal entities, for personal transactions, or you don't overlabor the income of a business. There is need for prudent financial management. You look at the income generated by the business and match it with the expenditure of the business. If you don't, or if any business does not apply the business venture concept as regards expenditures and income, you will discover that the business may not last. Expenses that may be well over the income of the business may be entered into, and this can lead to liquidation of the business, untimely liquidation of the business. So we are saying under this subheading that there are basic necessities for success in business venture. And these are summarized this way: the maintenance of cash book, at least 2-column cash book, very necessary. Application of business entity concept, very important. And then adoption of prudent financial management, very critical. Now let's summarize our lesson for today. We have been able to explain the need for keeping essential accounting records. We have also been able to describe basic accounting records that are required for business ventures to succeed. And finally, we have explained the basic necessities for success in business venture or for business venture owners. This is where we will draw the curtain for today's lecture. Thank you for listening, and see you in another module. Thank you.